Welcome back to The Dive. The Fed indicated that they will adhere to the bond purchase schedule as announced in December 2021. And our guest today is here to share his thoughts about it, as well as inflation, the silver market, gold, and cryptocurrencies. He's an author and the founder, owner, speaker, and consultant of the Morgan Report. The silver guru himself, David Morgan's joining us today. But before we bring you David's interview, be sure to tap that subscribe button for me, please. Hey, David, welcome back to The Dive.
Oh, Cassandra, it's good to be back. Thank you.
Yeah, thank you so much for joining us. Okay, so let's start with the recent FOMC meetings. The Fed indicated they were on track to finish tapering by early March, and then they would be looking at shrinking their balance sheet and raising rates. Do you think the Fed is just blowing hot air, or do you think we'll see tangible rate hikes and quantitative tightening this year?
Well, at the present time, I think they're blowing hot air. I mean, they've already established this once before. They started to just tweak it a slight bit. We got a huge dump in the stock market, and then they backed off entirely. So almost everybody in my peer group is saying that's kind of what's going to happen here. And maybe even they won't even tighten that much. On the other hand, as I've said on one other interview, if the powers that be that control the monetary system want to crash the system and do their reset, all they have to do is keep ratcheting up interest rates, and they'll get exactly what that would portend, which means they would basically crash the bond market, which is the most stabilizing force in the whole system, is the debt credit market. So I wouldn't rule that out. I doubt that's the case, but it's going to crumble of its own weight at some point. So my answer right now is no, I think the former. I think it's mostly rhetoric. Yeah, they'll probably taper some, and they'll probably raise interest rates somewhat. The market will react as before, and they'll back off. But again, there is the possibility. I just want people to be prepared for it. And the other part is that it's an eventuality anyway, whether they tighten or not. At some point, people, as von Mises said in A Crack of Boom, will say, just like Venezuela, where you see the currency on the sidewalk, it's so worthless. Not saying that the US dollar will become that worthless, it won't, but it will be shunned by more and more nation states. Like Russia's divested a lot of their dollars. So as China, other nation states are buying. The Fed's the buyer of last resort, and they keep buying more and more and more. And now they're saying that they're going to lighten up. Well, who are they going to sell to? And the only people that are left to sell to are like, I don't want any more of this stuff. So what happens? You got to bribe them. How do you bribe them? You raise interest rates. So it's not a pretty picture going forward. I hope I explained that sufficiently for everybody to understand that it's the devil in the deep blue sea, and there's no way out.
Scary stuff. Okay, so what about inflation? How big of a problem do you think inflation is for Biden right now?
Huge. Of course, he's in total denial about almost everything, like a lot of politicians. I mean, most politicians worldwide blame their constituency that it's always our fault, but it's not. In some cases, it is. I mean, but I think inflation is a huge problem. I think that there's really no way to get around it other than just hot air and just trying to deflate the inflation thing. I mean, I'm old enough to remember under Gerald Ford, a lot of hot air coming out of the political class. They had these win buttons, whip inflation now. Yeah, right. It's built in now, not so much from the money supply, which is always a part of it. And by definition, as an Austrian, an increase in money supply is inflation. I won't argue that fact. But now it's more of this cost push system with the supply chain breakdown and food supplies being curtailed from various ways. And food is essential, and energy is essential, and fertilizer prices are doubling in conventional, and then in the nitrogen, which is the most powerful one, it's up about fourfold in some cases. So, it's hard times ahead. I don't like broadcasting the fear card or anything else. I am a realist. The real truth is that we're going to face higher food prices across the board and higher energy prices across the board. And people perceive that as inflation, even if supply driven.
Definitely. Well, okay, let's shift to silver here.
Okay.
2022 is starting off great for precious metals. How sustainable do you think this is?
Well, with what the Fed's doing and everyone being so synced to interest rates, I think that we will have a back and forth. I mean, we started a rally, and again, a lot of my peer group were saying the rally's here, it's going to go up and up and up. And I'm exaggerating slightly, but they said we're on the corner of really moving, and I didn't. I did for my premium paid subscribers. I looked at the charts. I said, I think we're about as high as we're going to go right now, and here's why, and explained it. And sure enough, I didn't want to be right, but we got whacked after this last Fed situation. And I think silver was down like 85 cents yesterday, and it's off a dime the last time I checked today, Cassandra. So unfortunate, but the markets move for a lot of reasons. And the silver market is so small, it's pretty easy to take it whatever direction you want with big money players. And who has infinite money? The banks. And who's in the control of the silver market and the gold market? The banks.
Definitely. Okay, so what about Tesla? They recently signed a deal for the first US nickel supply for their batteries. Basically, Tesla is buying directly from mines and removing the banks from the system. What are your thoughts on this? Could we see the silver industry move towards cutting bullion banks out of the process?
Well, I'd love it. And I think yes. And that's a great question. Thank you. I'm surprised. I'm not surprised it's nickel. I'm thinking it could have, should have, might have been silver. But I believe it's Samsung has a relationship almost identical in practical terms with Avino mines. And so they don't want to be left to the middleman. They want to go direct. And I think you'll see more and more of that. So I think it's a very insightful question to get the public aware that, and the whole DeFi thing is peer to peer. I need your raw material. I want to buy it directly from you. I don't need a broker in between to take a big fee. And the thing about the fee is I'm not against people making a profit for providing a service. But if you look at Wall Street, and you look at the unbelievable compensation packages some of these executives get, where does that come from? It comes from the friction. It comes from what the cost of doing that trade is. And if they're paying exorbitant salaries, that would imply that the fees that they're taking are exorbitant. Whereas in a peer-to-peer, we both might be happy with a very small percentage. So there's a lot to be said about how DeFi could be beneficial to us, to the people at large.
Now, Goldman Sachs recently increased their price target on gold to $2,150 for 2022. What do you think would drive the price higher here?
I think uncertainty in the markets and a weaker stock market, and particularly if we see it, a weaker bond market. So, gold is the go-to investment. The banks really don't say much positive. Obviously, you just quoted GS and what they said. I think that's probably a pretty good number. And I think silver will, of course, follow along or maybe lead. But we are going to see higher metals prices over the next few years because the breakdown in the system, I don't think is out more than 3 years at the most, as what I said on your first question.
Yeah. Okay, so let's talk about crypto. The International Monetary Fund's executive board has recommended El Salvador no longer use Bitcoin as legal tender, citing potential risks to financial stability and consumer protection. Where do you see this going?
Further, I think there's going to be more and more regulation surrounding the crypto space altogether. And, I know the BTC guys are going to hate me, but they can hate me. I'm not here running for political office. It doesn't work as a currency. It's really too cumbersome to work as a currency. And that's one of many issues surrounding Bitcoin. The political class dictated that Bitcoin will be used, must be used, but the people didn't want it. They found it cumbersome. It wasn't easy for them. And so that was a pushback. And of course, here comes IMF. That's the bankers' bank saying it's a big no-no. You can't do that. So there's going to be a shakeout. I've been saying this now for, I don't know, 3-4 months, that the space isn't going away. It's going to be regulated. You're going to see a lot of these dot, dot, blank, blank, asterisk, asterisk coins go away. And it'll be similar to the tech wreck. A lot of stuff that's worthless will become worthless and go off the board. And once the dust settles, you'll see the stalwarts, the ones that really have an innovation, that are really of service to others. They'll come to the fore, and they'll probably be lower in price than they are now. And then the whole system will move forward. And I think it'll be a better adoption at that place. That's how I see it.
Mm-hmm. There's a lot of talk about Bitcoin mining causing energy-related issues for Kazakhstan, and also a top EU financial regulator called for Europe to ban proof-of-work mining altogether. Do you think we'll start to hear more talk of banning Bitcoin mining in the near term?
Near term, yeah, I think we will. Longer term and near term, probably. The situation is we have got an energy crunch coming up soon. And so the green movement is going to take something that everyone's aware of. And at this point in time, almost everyone is aware of Bitcoin. They may not understand it, or then people say, I don't. I think they got a pretty good handle on it. But regardless, they're going to say Bitcoin's taking up energy and it's not a good thing. And so what you just said about Kazakhstan, I think will breach into other areas. And there may even be sort of a mantra or a meme about this isn't right, So, it's an interesting concept as far as how the whole thing came about. And I don't want to wander off down a rabbit trail, Cassandra, but there's a lot to the story, and it's against the ESG mandate, which is the environment, social contracts, and governments. And those three together are a pretty powerful force to say mining is not environmentally friendly.
Mm-hmm. Well, before I let you go, are there any cryptocurrencies that you are excited about?
Well, I'm excited about a few of them. I have just two. I've been associated with the Lode project. If you want, you could go to ag.lode.one. It is a gold and silver backed crypto. We just started an association with the gold standard DAO, DAO. You can look that up. I think if you just type in gold standard DAO, DAO in any search engine, you'll find it. It's a public offering that's becoming available, I think, today onward. And it's a way to earn return on gold investment. The thing about the gold standard, if I can just take a little bit more time, is, people say, well, the gold standard failed. And there's a couple of pretty good intellectuals that said these guys that talk about the gold standard never took 5 minutes to study the history of gold. Well, believe me, you look at those books back there, I've taken more than 5 minutes. And they're right in a way that the gold standard fails, but it's not gold that fails. It's the human element. Because as the United States do, which is the best case most people can relate to, is that the US at Bretton Woods said we're going on a dollar standard, but the dollar standard is guaranteed by gold. If you take 35 of these $1 pieces of paper and put them on the table, we'll give you an ounce of gold. And that worked for a long time until the US cheated and started making a lot more dollars, and there was gold to back it up. And that's sort of the short story of what happens over and over and over again on the gold standard. And is it gold's fault? No, I don't think so. Gold can't think, can't talk, can't walk. It's the human element that gets involved. The beauty about the blockchain is that it's immutable, that it's there forever, and that it's consensus between the parties. So if there's ever going to be a gold standard that works, it'd be one that was tied to the blockchain where you can't cheat. So in a way, I think I'm more, more excited about the possibilities of a true gold standard. Believe me, I'm for competing currencies. Doesn't mean no, it's got to be a gold standard. It doesn't. But if you're so inclined to keep part of your money in precious metals, I think it's a pretty good way to do it. Would I recommend that's the only avenue you go? No, not. I would still say what I've always said, gold in hand is better than gold stored anywhere, even on a blockchain. But nonetheless, for people that have it and want to explore the possibility of what that would entail, plus it's so much easier access, cross-border, you don't have to declare it when you move it through a country border or whatever. So thanks for letting me take that extra time, Cassandra. I just wanted to point out that it is a rapidly changing, technologically driven world, and that means more silver.
Awesome. Well, thank you so much for joining us. I always appreciate hearing your thoughts, David.
My pleasure. Thank you.
Thanks so much for tuning in today. We'll be back again tomorrow, but in the meantime, you can always check out that video.